In this video, we're going to look at 10 intermediate trading terms that you need to know and how you can use them to buy and sell cryptocurrency. And make sure you stick around until the end of this video because I have got a bonus tip to really help you supercharge your trading. Hey, it's Cobb here from TRADERCOBB, an online education platform that provides a complete solution for you to become the best cryptocurrency trader you can be. If you are new here, make sure to click on that subscribe button, and you can find any of the links I mention in the description just below. Let's get started. This is a follow-up to a previous video, 8 basic trading terms that you need to know. If you haven't seen that, then I suggest watching that first. You can find a link here. Otherwise, let's go over 10 intermediate trading terms that you need to know right now. Number 1, technical analysis. And technical analysis is the study of historical price action in order to identify patterns and determine probabilities of future movements in the market. We use specific technical indicators and identify important information like trend, support and resistance levels, and moving averages. Technical analysis does not attempt to measure an asset's underlying value, but rather uses price charts and technical indicators to identify patterns that can be used as a basis for trade entries and exits. Number 2, the bid, the ask, and the spread. In simple terms, the bid is the amount you, the buyer, are willing to pay for a particular asset, in this case cryptocurrency. The ask is the amount the seller is willing to accept for an asset. So you might be willing to buy a single Bitcoin for $20,000. This is your bid. But the cheapest Bitcoin for sale on an exchange might be $20,500. That's the ask, also known as the offer. The space in between the bid and the ask is called the spread. So in this example, the spread is $500. Taking advantage of the spread is how brokers can make money buying and selling for other people. Number 3, order books. One-on-one transactions are easy enough, but finding someone who is selling the exact amount of cryptocurrency that you want to purchase at an exact amount that you want to purchase could be very difficult without an exchange. To keep track of millions of bids and offers, exchanges use something called an order book. This helps to match buyers with sellers and keep the market ticking along, 24 hours a day, 7 days a week. Most exchanges will have a chart that is constantly updating, with the buyers listed on one side and the sellers on the other. You can watch this in real time as the bulls and the bears battle it out and the price of the asset fluctuates. Number 4, volume. Volume is a key indicator of market activity and liquidity. It measures the quantity of a particular asset traded over a period of time. Volume is an important indicator when you're trading large quantities of cryptocurrency, no doubt. This is why it makes sense to stick to the larger, well-established exchanges. If an exchange has low volume and you raise an order, it's quite possible the price may jump or skip your order altogether, which can be very, very frustrating. Number 5, moving averages. A moving average, which is MA for short, is a technical indicator that averages a currency pair's price over a period of time. In statistics, a moving average is simply a mean of a certain set of data. In this case of technical analysis, the data is usually represented by the closing prices of currency pairs for a certain time period. For example, a 5-day MA will require 5 days of data, while a 200-day moving average will require 200 days worth of data. Personally, I like to combine the 10 and 20 period moving averages. This means on the daily chart, it will use both 10 and 20 days worth of data, while on an hourly chart, it will use 10 and 20 hours worth of data. Number 6, MACD. The MACD, or Moving Average Convergence Divergence indicator, is a momentum oscillator used to trade trends. MACD plots the distance between moving averages and helps traders identify direction and whether the bullish or bearish momentum in the price is strengthening or perhaps even weakening. Number 7, stop loss. A stop loss is a type of order that, when triggered, will automatically close your position at the current market price. It is a defense mechanism used to protect traders against further losses. No matter what anybody tells you, stop losses are very, very, very important, and you must learn how to use them. Anyone who says they don't use stop losses because they keep getting stopped out doesn't really understand how to use a stop loss correctly or how to trade correctly. Number 8, margin and leverage. Most traders begin their journey with a modestly sized account. As the saying goes, don't risk more than you are willing to lose. But once you've honed your skills and have a particularly strong strategy, you may start to think, I could make a lot more money if I had a bigger account to trade with. Makes sense. This is where margin trading comes in very handy. It is a detailed topic for more experienced traders, and we'll cover it in greater detail in a future video. But for now, just so you know, it's possible to leverage your account and open positions that are 5 times, 10 times, 20, or even 100 times the amount you currently have. Of course, because you are essentially borrowing money, there is a lot of risk that comes along with margin trading. So make sure you know exactly what you are doing before you jump in. Number 9, support and resistance. Support and resistance levels are a build-up of supply and demand in a market. Support is a price level that acts as a floor, preventing prices from dropping below that level, one would think. Resistance is the opposite. It's a price level that acts as a bit of a ceiling, a barrier that prevents prices from rising higher. Often you'll see price action have several attempts to break through these levels, building into a sort of a wedge type shape, until the dam finally bursts and price continues. We take advantage of support and resistance levels in the Bitcoin breakout strategy, which I cover in my online trading course. Number 10, convergence and divergence. Now, when two lines move closer to each other, they're converging. And when they're moving away from each other, they are diverging. When we display both the MACD and the price action on a chart, we want to make sure they are both showing us the same information. So if price is making higher highs and higher lows, we also want to see the MACD making higher highs and higher lows. This is called convergence, and it is an indication that price will continue to move higher. If price action is making higher highs, but the MACD is making lower highs, this is called divergence. And while it's not an indicator that price will stop moving higher, it could be showing us that price is losing some of that momentum and we should stay out of that trade. That's all of them. 10 intermediate trading terms that you need to know. And as I said at the beginning of the video, I have a bonus tip that will help you supercharge your trading. And that tip is a trading strategy. You should now have a relatively good understanding of the lingo used by traders, which is an excellent foundation to start your trading career. But it is important to understand that these terms and indicators are only individual ingredients, and you can't bake a cake with ingredients alone. For that, you need a recipe. And that recipe is your trading strategy. And it should be a checklist-based plan that you follow to the letter. There's no room for subjectivity in your trading. You want your strategy to be clear and methodical, requiring no decision-making once a trade is active. So where to from here? If you would like to continue your trading journey, we've got a completely free course called Become a Trader. This will give you all the knowledge that you need to dip your toes into the cryptocurrency market and help you become a consistently profitable trader. You will either find the link up here or in the description below. Thanks for watching. Please hit that like button so more people will see my content and I can spend more time creating new stuff for you. Also, please hit the subscribe button to receive alerts whenever I upload new content like this. And remember, the key to becoming a successful trader is to plan your trades and trade your plan. So let's get started on your plan. See you next time.